What's up everybody, Simon here. In this video, I am going to go ahead and talk about the upcoming stock market collapse. We are seeing a lot of signs that the stock market is in trouble. In fact, today, for example, Facebook alone, or Meta, their parent company, dropped by a whopping 25%. It is the single biggest stock market drop for any US public company ever. In this video, we're going to go over some things that could affect the stock market collapse. We're also going to go ahead and discuss what you may want to do with your investments, what I'm going to do with my investments to prepare for this such collapse. So let's get into this video. But before I do, I always remind you guys, please do me the biggest favor. Like this video, subscribe to the channel if you have not done so already, and comment below what you think about the upcoming collapse. If we are truly in trouble, if it's unavoidable because we have not had one, but I want to know in your comments below what you think. So let's get into this video. Okay, so first we have to acknowledge the markets have gone up so much in the past few years. In fact, the pandemic did not slow the markets down as much as we all thought it would. Certain stocks have done really well. In fact, the world's richest people have gotten richer. The biggest companies, to no surprise, have gotten bigger and more wealthier. Recently, however, Facebook, one of the bigger players in the game, has completely crashed. That is a big problem. On top of that, there's the theory of what goes up must come down eventually, and we have not had a big stock market collapse since 2008. That's a 14-year gap, and that's not normal. Also, the S&P 500 posted a negative return of 5.26% in January of 2022, making it the worst month since it plunged 12.5% in March of 2020 after COVID was announced and scared everybody. So with Facebook and Meta's plunge of 25 or so percent kind of rattled the stock market in the tech industry, and it set stocks even further down. If the tech industry is not going to support the stock market as it has done in the past, we are potentially going to be in trouble. Facebook, of course, had a disappointing quarter, which is really weird because it did not meet its quarterly fourth quarter results in terms of revenue, and it had a slower fourth quarter than expected.
It sounds to me like they're distracted. And what happens when you're distracted is you spend a ton of money and you wind up taking your focus off the ball.
Now, they still have one of the biggest user bases in social media out there. However, even with people being more at home and being on their phones and more people having smartphones, for whatever reason, they were not able to grow their advertising. What that says is less companies are advertising, kind of showing a significant slowdown in advertising and spending from company to company. Cryptocurrency also has declined nearly 50% on some of the biggest coins out there. Bitcoin, Ethereum, etc. have all plunged, and it's caused a massive sell-off of some of the coins. In fact, one of the bigger coins that I owned was Dogecoin. It went from 75 cents to now trading at 13 cents. That's a massive decline. People have talked about buying the dip, and this strategy may or may not work, so we need to kind of address buying the dip. Dip buying has been a winning strategy for the S&P 500 for the most part over a course of a decade. It's also been a great winning strategy for certain coins such as Bitcoin and Ethereum if you were buying it early. However, for example, if you were buying the dip on Dogecoin at say 60 cents, 50 cents, 40 cents, 30 cents, etc., you may be in trouble if you don't have the time to wait for that coin to bounce back up. So buying the dip is rather dangerous. We typically see dips and quick recoveries with cryptocurrency, but lately we have not seen that. Historically, when the S&P 500 was below and people bought the dip, it took 7 years from 2000 to 2007 to reach highs again. So if you're buying the dip, you may be waiting for a long time to reach that high or even get your money back if the dip continues. And with S&P 500 from 2008 to 2014, which was the last crash, it took nearly 6 years to reach a new high again. So keep in mind, guys, if you're investing and you're buying those dips, you may be in it for the long haul, and that's what I want to warn you guys about, not to just buy anything. You need to be laser focused on the investments you're making versus trying to make a wide, broad investment altogether. Cryptocurrency was supposed to be an unregulated, untouched market for people to avoid the stock market troubles, such as what we're seeing today with inflation, supply issues, etc. But cryptocurrency has been affected the same way it seems like the stock market. And in fact, recently, the feds have announced, or the government has announced, that they will be regulating potentially cryptocurrency, which could be a good or bad thing depending on how you look at cryptocurrency. And that may either spike the prices or set them even further. If it sets the prices prices even lower, guess what? The stock market will have to also correlate with what's happening with crypto. Once money is wiped out, it doesn't matter if it's in stocks or in crypto, it's going to happen. So with the government taking interest in putting an executive order on cryptocurrency, the positive is they can regulate it, make it less fraudulent, make these coins less volatile potentially, where they are dropping in big numbers and your investments are being wiped out. But at the same time, it could put a fear into the digital currency world that was supposed to be unregulated, unaffected by what the government does with their spending. If you checked out my channel in the past, you notice I did a video maybe a year back or so on FedCoin when I did my research and realized that the government may potentially come out with their own version of cryptocurrency, and they will go ahead and make all cash void, basically taking out all of the cash in the market, regulating a digital asset. That is potentially the future for currency with the federal government. So regulation is a twofold part. First, we realize that the government legitimizes cryptocurrency and realizes that digital currency is here to stay, or it's as effective as the US dollar. That is good news. That means cryptocurrency is valid, it's valuable, and it has a lot of potential. But as the regulations happen and dips start happening, people are going to need to decide whether or not to buy those dips. Buying the dip is a famously generated buzz that people have created on the internet to continue to have your money invested back into what's falling. It's almost like going to a department store and seeing a sale price on an overpriced dress, shoes, you name it. That's what buying the dip can potentially be. It doesn't necessarily mean that you're getting something at a discounted price, so you really have to be careful. What can also lead to the next stock market collapse is the fact that real estate may collapse as well. Right now, there's a shortage of supply of homes. That's keeping the price higher. We had a relatively low interest rate that made more interest into buying homes a reality for people. But as the Fed's already increased the interest rate and may continue to increase the interest rate to fight off inflation, less people are going to be able to afford the homes. And because of potential foreclosures for all those people that have not paid their mortgages, for all those landlords that couldn't pay their mortgage because the renters didn't pay their rent, etc., you will see more housing on the market, or more supply of housing on the market. That is going to lead to a housing market price drop in most markets, not all markets. And what that will do is basically overflood the market with properties, and less people being able to afford buying properties. You're just going to have an abundance of supply in the markets. That will greatly affect the stock market as well. Finally, job cuts. ADP, one of the biggest payroll services, a payroll service I use for several of my businesses, has reported that in January 2022, there has been 300,000 plus job cuts. That is the first decline since December of 2020. As the pandemic continues, consumer confidence falls, retail is falling, commercial real estate is no longer needed as more people are working from home. ADP has reported a massive cut. And with the job gains reports not meeting the quota, we are potentially seeing what could be the next big crash. We will also discuss inflation. Yes, inflation. Everything around you is costing you more money. It's because of logistics. It's because of the new administration. It's because of many factors that go into this part of what's happening. As inflation grew and more money was printed, less production of things happened during this time of the pandemic. Things have gotten way out of price, way out of control. Fuel cost has risen over $5 in California. In certain places in California, we've seen it at $7. Food or meat has gone up as high as 25 to 30% in certain grocery stores. Everything that you're buying today cost you less about a year to a year and a half ago. Wages have not increased as much as inflation has increased, and therefore it's causing a lot of families a lot of hardship to just keep food on the table and at the same time still support their family, which is unfortunate. People's living expenses have gone up so much, yet the quality of life has not improved for a lot of individuals pretty much all over the world. In fact, inflation was so high that the famous dollar store have raised their prices to $1.25. That is a 25% increase on goods alone that you were buying 25% less before. This is possibly due because of the shipping container prices, again, inflation, etc. So logistics has gone up, everything has gone up, and now those prices are reflected at the convenience stores. Also, Amazon has recently raised their Prime membership by 17% from $119 to $139, further proving that costs are increasing and inflation is happening. Now, they are saying they're packaging more things to offer you with that increase in price, but we all know what's happening, inflation. So as an investor, this is a major collapse happening. I don't know if you should be buying the dips right now. Obviously, check with your advisor. However, personally, I am not investing big into anything right now. I don't have the confidence in the next several months where the markets are going to go. We're seeing stagnant job growth. We're seeing higher interest rates. We're still seeing an inflation happening anyway that's not meeting wages that people are making. Therefore, it's causing a lot of economic instability. The stock market has taken a hit because of it. Cryptocurrency has taken a hit because of it. And real estate possibly will be the next big thing to take a hit because of all these variables that we've discussed. Let me know in the comments below what you guys think, whether or not I'm onto something or whether or not this is just going to continue to go up and we're in a slight speed bump, so to speak, with the stock market recently having a hard time getting to new highs and having a hard time stabilizing. Cryptocurrency as well, same boat as the stock market, which in the past have proven to be two different variables. However, now it looks like one affects the other. Money is being regulated, whether it's in US dollars or a foreign currency, and now a digital currency, which we'll also see what the Fed say in the future. That potentially could be scary. Anyway, I hope you enjoyed this video. Comment below. Let me know what you guys think. Give me a like. That's the biggest favor you could do for me. Subscribe to the channel if you haven't done so already, and I'll catch you guys here in the next video.